Hey, it's Jessica Curtis-Blair of JCB Real Estate, and today I want to talk a little bit about the number one question that I have been getting from people recently. And that question is, are home prices going to go down in 2019? So I really want to cover that today. I want to try to keep this video as short as possible, but at the same time, I really want to educate you guys about where my opinion on this comes from. So I'm going to start out by going through with you guys how we as realtors monitor the market. From there, I'm going to talk about what we have seen happen in the last year, and then I will conclude with what that means for 2019 and our price is going to go down. So obviously we as realtors do not have crystal balls and we cannot tell you 100% for sure what is going to happen in the market. Nobody can. However, what we do have is what we call absorption rates, and absorption rates are the closest thing to a crystal ball that a realtor has. So what that is it's a calculation based on how much inventory is currently on the market and how fast that inventory is selling. So when we do that calculation, it tells us how many months of inventory is currently on the market. What that means is if no new listings came up today, how many months would it take for all of the current inventory to sell off of the market? So to try to make this as simple as possible, I explain to you what we do with these absorption rates. So when we see that there's 0 to 3 months of inventory on the market, the absorption rate is 3 months or below, then we know that that's a seller's market. What that means is inventory is low. Houses that are priced correctly are probably going to sell very fast. Buyers have to make choices in a very quick amount of time, and sellers are going to get to dictate the terms a little bit more. When we get into more of a balanced market, which is 3 to 6 months of inventory, then that means there's a little bit more for buyers to choose from. They have a little bit more time to make a decision. They can think about it for a couple of days, and the terms and the price are going to be a little bit more negotiable. Now, when we see the market creep up into 6 months or more of inventory on the market, that's when we know it's a buyer's market, which means there's a lot of inventory, there's lots for buyers to choose from, and the buyer is really going to get to dictate the terms a little bit more. So I'm going to talk to you guys about the absorption rates over the past year. So the way that we can kind of use them as a crystal ball is we can see where they started out a year ago and where they've crept up to or crept down to can kind of show us a little bit more of what type of a market that we're going into or what type of a market that we can expect. I'm actually going to use absorption rates for the GTA because the GTA is where the majority of homes in Ontario are sold, and we get a lot of their spillover. So when following all of the absorption rates and following the market, what I've really noticed in the last few years is when something happens in the GTA, generally shortly after, but a couple months, we start to see it in our area. So when it gets really busy in Toronto, we start to get that spillover, we start to really pick up. When it starts really slow down in Toronto, shortly after, we follow that trend as well. So in 2018, in the GTA, they started out with 2 months of inventory in the market. So that's a good seller's market. From there, from the beginning of 2018 until today, they've jumped around 2.3, 2.6, 2.7, 2.8, and they ended 2018 with 2.8 months of inventory in the market. So that still puts us in a seller's market. Now let's look at 3 major things that happened in Ontario in 2018. Number 1, the government introduced the foreign buyers tax. A lot of the buyers that were coming into Toronto in the area or buying homes in Toronto and condos were foreign buyers, which was really pushing the prices up. Now, the government introduced this tax to try to deter or make it more expensive for some of these foreign buyers to purchase these homes. Then we had the Bank of Canada hike their interest rate about 3 times in 2018. And we also had the mortgage stress test come at the beginning of 2018, which means that anybody that was putting 20% down or more on a home was going to qualify for less because they had to pass this stress test that we didn't have before. So these were 3 major things that were really predicted to slow down the market considerably. But looking back, it didn't even push us out of a seller's market. We ended that market in 2018 with 2.8 months of inventory, which means it was still a seller's market, which means homes that were priced properly were still moving quick and inventory was still low. And that is no indication of any type of price drop. So looking into 2019, the economy is good, employment is good. Something really major would have to happen for us to move all the way from a seller's market all the way into a buyer's market and push us far enough into a buyer's market that it actually brought the prices down. So if those three major events in 2018 didn't even come close to doing that, I'm not sure what would in 2019. Now let's also look at the fact that Canada is planning to bring about 1 million immigrants into the country in the next 3 years. Now immigrants tend to move to large metropolitan areas like Vancouver and Toronto, right? So all that's going to do is bring the housing demand up. So there's nothing here that's telling us that prices are going to be going down anytime soon. So like I said, I don't have a crystal ball, of course, but with everything looking the way it is, I really don't see any drop in prices. Are we going to have those huge price raises like we've had in the last couple of years? I don't think so. No, that's really not sustainable. And I really hope that we don't. But I think we can go back to seeing probably about a 1 to 3% raise, like a normal real estate market in 2019.